We are so lucky to have Lauren Foos with State Farm here with us today. And due to the recent events, whether it be the CZU fire or these crazy storms that we experienced in January, the topic of insurance is top of mind for many homeowners. So, Lauren, with your experience, your local knowledge, we're so happy to have you here. We welcome you. Thank you so much for joining us.
Great, Kaelin. Certainly happy to be here with you today.
Great. So let's go ahead and get started off just kind of explaining insurance to those that are watching. So what is covered in standard insurance? When people are applying for home insurance, what do they normally get? What are their protections?
When you're talking about a standard homeowner's insurance policy, it basically provides protection for 4 different areas. The first one would be the home itself, right? The actual structure of the property. And with regards to insurance, you'll usually see that referred to as the dwelling. So the dwelling is the home, and that's the main part of the homeowner's policy for sure. A homeowner's policy would also provide protection for one's personal property, their clothing, their furniture, their electronics, and basically anything that they own that is not a permanent part of the house that would fall under that category of personal property. Another line item of coverage that can be important for homeowners is what's called personal liability coverage. Basically, what that would do is if a homeowner was responsible for causing any sort of bodily injury or property damage to somebody else, and they're found to be liable for those damages, then a homeowner's policy can provide protection for liability and defense costs. Lastly, the fourth main one, and this one can be very important depending on the type of loss, but it's a coverage called loss of use. And basically what loss of use does is that it would pay a person's additional living expenses if they had to go live somewhere else for an extended period of time while their home was being repaired or rebuilt from any sort of covered loss.
Wow.
So that one can be very important when you talk about the CZU fire and the damage and displacement that they did. That's been a very important coverage for many, many of those impacted people. Again, so it covers your home, personal property, personal liability coverage, and then any additional living expenses. Those are the main areas of coverage.
Something that often comes up when I am looking at a property with a buyer is they will see a large tree in the front, and they'll always ask, okay, well, if that falls into the neighbor's property, am I on the hook for the damage? So how does that work with liability?
Yeah, great question. That comes up a lot for sure. And the bottom line is legally, I am not liable for that because there was no negligence. I was taking care of the tree. It was otherwise a healthy tree that just happened to be knocked over in the event of a significant weather event. Because that's usually what happens. It's usually, wind and rain together is when trees come. And so this is something that oftentimes is very much a frustration of people, because if a tree falls on their property and it's their neighbor's tree, you would automatically assume that the neighbor is responsible. That would be a reasonable thing to think. But with regards to insurance, that is not how that works. The only time where the neighbor could be responsible for their tree falling on you would be if they just clearly neglected the tree. It was sick or it was dying. Maybe you even mentioned it to your neighbor about your concern about it, and they still chose not to do anything about it. Then in that scenario, there could be a liability on their part where the homeowner's policy could kick in.
But if, the homeowner was on top of it, they were not negligent, still the neighbor could reach out to their insurance company and ask for help in that way, as a tree fell into their yard, broke their fence, or whatever it may have been.
Absolutely. Yes. Their homeowner's policy should definitely cover that.
Can you explain to me, we were talking about, the loss of use, we were talking about the CZU fire, we have the recent storms that came out where people were displaced. Can you tell me what underinsuring is? I've heard this term a lot. What does that mean, and how does it apply when disaster strikes?
That's a very valid question too. So Underinsuring, it simply means that a homeowner's, their policy does not have enough dwelling coverage that would enable them to rebuild their home if there was a total loss. Typically, that would involve a fire, right? And so on a homeowner's policy, that line item of coverage, it's called dwelling coverage. And that's an industry standard. So any company's homeowner's policy, usually the first line item of coverage is dwelling coverage.
Right.
That's the amount of coverage for the house. And it's also important to know that the dwelling coverage is the most prominent factor of determining what their homeowner's premium is. So the higher the dwelling coverage, the higher the premium is going to be. Okay. Right. So a lot of times we'll see people, they might, in an effort to get their premium lower, they will go with a lower dwelling coverage to do that. But essentially what that means is, and I'll give you an example. Let's say for somebody in the CZU fire, their house was completely destroyed in the fire, and the cost of rebuilding their house is going to be $800,000. And I'm just making a number up, obviously. But if their dwelling coverage was only $600,000, then even though it's going to cost $800,000 to rebuild their home, their policy isn't going to pay out any more than that $600,000 to rebuild.
Right.
And so they could be in a position they'd be considered to be underinsured. And that would put them in a position to where their home cannot be rebuilt, to the similar fashion of the home that they had before the fire. And right. So they may have to cut corners, or they may have to come out of pocket in order to appropriately rebuild the home the way that they want. Right. So that's why that dwelling coverage is so important. A lot of people don't think about it, until you're faced with being in a situation where you need it.
Yeah.
The other thing I would say too, Kaelin, because this happened a lot with the CZU fire, is if somebody's had a homeowner's policy in place on that property for many, many years and it hasn't been reviewed, I would definitely encourage people to do that, because we heard a lot of those stories too about people that have had, homeowners policies in place for 20 or 30 years and no one's really talked about it. Maybe the insurance company hasn't talked to them about it, or they haven't reached out to their insurance representative. And now they're finding that, oh gosh, I don't have enough coverage that I need to rebuild.
Wow.
Yeah.
And I don't know how inflation ties into that as well, because we've had massive inflation as of late, and the cost to rebuild, I would assume, is massively more expensive than it was 20 years ago when those amounts were calculated.
No question about it.
Wow.
And even though most policies have an inflation component built into it, or it's supposed to help with the dwelling coverage kind of increase each year to keep up with inflation, it has not kept up at the pace that inflation has actually occurred, particularly more recently. And then throw on that the fact when you have a CZU fire event or any sort of large fire where there's multiple people affected, the ability to get a contractor to come out becomes a big challenge. And, the construction costs go up as a function of that too, because there's so many people who are trying to get contractors to do the work for them that the costs go up based on that too. It's really important with that dwelling coverage that customers kind of know where they stand on that and make sure that they're comfortable that it would be adequate for them to rebuild in the case of a worst case scenario like a fire.
I would assume as well the loss of use too, and how that ties into it, because so many people have been displaced, whether it's the fire or the storms recently, for an extended period of time, where, there has to be some sort of plan for that.
Absolutely. We've got multiple customers that are just now starting the construction process, right? And we're almost 3 years into it. That loss of use has been a really, really important coverage for people that are dealing with that rebuild process.
Wow. Okay. So we've talked a lot about the CZU fire. And I remember when this happened, there were a lot of issues with insurance, even, people's policies not being renewed during this pivotal time due to these crazy fires. So with your experience during that time, how would you say the CZU fire has affected insurance in the area?
I would say that the CZU fire it kind of accelerated what was already starting to happen.
Mm,
And I mean, if you kind of go back and look at the fire seasons, I mean, really and truly, you go back to 2017, I think it was. And, since that year, there were multiple major wildfires. It seemed like every fire season throughout the
yeah.
state, right? It was taking it kind of to a level that we were not used to seeing. That was already causing a lot of insurance companies to reevaluate where they wanted to insure or not insure. And so you kind of started already then to see companies pull out of certain areas that they were not comfortable having exposure in because of wildfire. I think the CZU fire, that just, again, it just accelerated that process. And, we've seen certainly a lot of other companies that have pulled out of areas in the county where they're just not comfortable because of the fire exposure.
Right.
But yeah, I think, Kaelin, that had already started before the CZU fire. It's just gotten worse since the CZU
Right.
fire. Yeah.
Right. Okay. So what should buyers be aware of when they're purchasing a property in one of these high fire areas in terms of insurance?
It's a pretty simple answer. I mean, buyers should be aware of, they're probably going to have very few options in terms of insurance companies that would even be willing to write the insurance on that property, because most companies probably are not entertaining any new policies in those areas. There'd be scarcity in terms of options. And then they also need to anticipate that the cost for the homeowner's coverage in those areas probably going to be more in the higher wildfire areas than what it would be if they were in more of a metropolitan area or in town. They might expect as well as they might be subject to more inspections or follow-ups from their insurance company to make sure that they're doing everything that they can on their property to make it as fire hardy as they possibly can. So,
Right.
we're seeing companies they're actively engaged in making recommendations to customers in higher exposure areas to try
Wow.
and make fire, to try and mitigate fire exposure as much as possible.
So if a buyer is looking in, for instance, highly affected by the CZU fire, Boulder Creek or Bonnie Doon, they should be prepared that there are limited companies that will insure them, or if that particular property is just not available to certain companies, they may have to go private, or the California Fair Plan, which is also very expensive.
Exactly. I mean, and I think you hit a very important point. The California Fair Plan, it might be their only option,
Right.
for the fire coverage. And as you mentioned, it's not very user friendly in terms of the cost of that policy.
Lots of fun things with home ownership, I tell ya. So,
Yes.
with the recent storms, all right, pivoting to what happened in January, how has that event affected insurance in the area?
I don't see any effect at this point, and I don't know if there will be any, significant effect in the near future on that. The one thing that I would say, I think what the storms of December and January have done, I think it's made people understand better what they're covered for and more importantly, what they're not covered for. Because a lot of the situations that we saw from the storms involved either flooding or it involved, mudslides or landslides on people's properties. We've been fielding multiple calls from people about landslide and mudslide and thinking that there might be coverage on their homeowner's policy for that. And unfortunately, homeowners policies do not cover landslide or mudslide or sinkhole or any sort of ground subsidence.
Wow.
That's just something that's not covered. And so I know that I've talked to a lot of disappointed people on that in the course of the last month or so. So I think it's made people understand more, but in terms of like insurance companies changing coverages or doing different things, I've not seen that at this point.
Okay, so let's talk about that. So if it's not covered in homeowners insurance, the first thing that pops to my mind is flood insurance. So with
Right.
flood insurance, what is covered?
Flood insurance, if somebody has a flood insurance policy, they can get coverage for their home or their dwelling, just like a homeowner's. And then they also have the option of getting coverage for their personal property if that's what they choose to do. But one of the key things with flood insurance, their definition of a covered loss, it's very specific.
Okay.
And most flood insurance is written through the National Flood Insurance Program, which is FEMA, right? And that's the federal government program. But people can also get flood insurance through private companies as well. But it's important to know that even if they get flood insurance through a private company, it's an industry standard in terms of what's considered to be a covered loss when it comes to flood insurance. So it's very specific. And the definition of a covered flood loss is the inundation of 2 or more acres of normally dry land, or of 2 or more properties, one of which belongs to the insured. Okay, so 2 or more acres or affecting 2 or more properties, and it has to result from one of these 3 things. An overflow of inland or tidal water. So that could be a river that's over its banks. It could be waves crashing in from the ocean, right? I mean, those are examples of what would be covered. Or it could be from rapid accumulation or runoff of surface water from any source. So let's just say it rains too hard, too fast, the water's got nowhere to go, and it puddles up and causes damage. That meets the definition of a flood.
Okay.
The third one is mud flow. And the way they define mud flow is a river of liquid and mud on the surface of normally dry land. So when you take a look at that definition, and I know it's crazy, it's very specific, and it almost puts you to sleep reading it. But a lot of people have asked, okay, I've got a landslide on my property. Would that be covered if I had flood insurance? Because they know that it's not covered on their homeowners. So now the question is, if I had flood insurance, would that be covered? And the answer is, based on the definition of flood, probably not, because they define mud flow as a river. So basically water and dirt that's moving along, like by a current. So it's almost like a river of dirt and mud that's being pushed. And so if somebody just has a landslide on their property, it's probably not going to meet that definition of flood in terms of flood insurance.
I certainly don't believe that I have any place to litigate this, but I am just curious, based on how it's written, if the fact of, the inundation of surface water, that would, rapid downpour at a fast pace, all at once, if that caused the landslide, would that fall into that category? Like the effects of the rapid downpour, the consequence of that was that landslide. Like, is there any movement there? Or if it caused an event, I mean, it's just so difficult. It's difficult to.
It's very difficult. And
wow.
So again, the first part of this did it affect 2 or more acres of normally dry land, right? Or did it impact 2 or more properties? So it's got to meet that, and then also one of these definitions of what they deem flood to be. So
Amazing.
It is. I don't honestly, if I don't know how FEMA would really make these so pinpointed determinations. I mean, to me, it would be very difficult in certain situations to determine, yes, there's coverage, or no, there's not coverage. But the one thing I can tell you for sure is that, and this is the scenario that happened more than anything else, Kaelin, with regards to the landslide or mudslides, most of the time, it was a situation where it didn't do any damage to their home, right? It's just part of their property slid off. Maybe there's a back part where there's a slope and it kind of slid down a little bit, or, you know, part of it maybe slid down on a road, right? But it didn't do any damage to their house or their personal property. So that's the other caveat to this too. In order for there to even potentially be coverage, it has to do damage to something. And if their property just slid and now they have to, pay to have somebody excavate it or move it, but it didn't do any damage to any covered property, it still would not have any chance of being a covered loss because there's no covered damage based on the language in the policy.
So preventative measures do not fall into this category if, you're trying to prevent a further slide that could potentially cause damage.
And unfortunately, that is a true comment. You are correct.
Wow.
Right.
Wow. Okay. So if flood insurance doesn't cover these things, is there another form of insurance that people can seek out for things like, I'm buying a mountain property. I live in the mountains. I want to make sure that I'm insured in case a landslide happens. Are there avenues for them to obtain a special coverage?
So the answer to that question is yes. It would be a type of policy it's called a difference in conditions policy.
Okay.
And normal insurance companies don't write this type of coverage. It's a very specialty coverage. It's extremely expensive,
I imagine.
And so I have had customers over the years that have looked into that. And once they have gotten the quote, they have opted to keep their fingers crossed that nothing happens because it's extremely cost prohibitive.
I understand. I remember I had a seller once that years prior had filed a claim because something was stolen, and it wasn't even in the home. It was in her vehicle driving to home. I'm not sure how it played out, but when someone went to apply for insurance for this property, the buyer, they were rejected due to that claim. And so this has got me thinking when, people are filing these insurance claims after these storms or the fire, how that's going to affect their premiums and insurability in the future. Do you have any thoughts on that?
With that question, Kaelin, there's not a specific answer to that. I mean, there's a number of things that could come into play that could have an effect on what that impact of filing a claim would be. Different insurance companies may have a little bit of a differing philosophy on that. So it might depend on who somebody is insured with. It could depend on how long they've had coverage with that company. I mean, usually if they're a longer term customer, maybe they'll get a little bit more consideration for a filed claim. Or if they have other lines of insurance also with that customer, like auto insurance and life insurance or whatever, sometimes those can help too. And it could also depend on the type of claim as well. Some claims can be looked at a little less favorably, and I can tell you a theft claim, most insurance companies will look at that a little less favorably than they would like something that happened just because of nature or a freak accident or weather, right? I mean, that's completely beyond one's control. So it's tough to say. I mean, I will say this though, and I think this applies generally to most insurance companies. Insurance companies they're not happy about a customer that has filed multiple claims, over a certain period of time. And so, and it doesn't even matter, Kaelin, if those claims are very minimal in payout. It's the frequency of claims that insurance companies don't like to see. And the reason for that is that statistically, it's overwhelmingly, statistics show that somebody who has a history of filing multiple claims on their homeowners is much more likely to file future claims. I mean, the statistics just show that, right? And so if a company sees somebody that's got multiple claims filed, then they may not offer insurance to that person, and or there could definitely be a surcharge on the premium associated with that. So my recommendation to people would be is that if it's something that's smaller in nature, in terms of the scope of the claim, maybe it's right around what their deductible amount is anyway, or just a little bit more.
Right.
It would probably be wise to not file that claim, particularly if you've got other recent filed claims,
Right.
or maybe you're insured in an area that's higher wildfire, right? And so you don't have very many options, so if you're filing multiple claims and your company drops you, you may not have many options other than the California FAIR plan to go to in that scenario. So that I think that's the main thing is that don't, if you can handle the smaller stuff yourself, let the insurance company handle the bigger stuff. You kind of self-insure the smaller stuff. That's probably a wise approach for most people.
And just for our knowledge, when you file a claim, that's something that runs with you as someone that is insurable for, for the next property, but it also runs with the property too. Is that right?
So that the different companies handle that differently, right?
Okay.
So some companies, they look at the loss history of just the specific customer. So if the customer had a claim, a year ago on a house, but now they're purchasing a new house, right? That claim from the previous house, even though it's not the new house they're buying, it would follow them. But if the house that they're purchasing, if the previous owner of that property, let's say they had a claim, but now this new person is buying the property, for a lot of companies, that existing claim for the previous customer should not impact the customer who is now buying the property.
Okay.
So, but you will see variations on that, unfortunately. So I can't speak for all companies on that.
So if there are people that are looking to upgrade their current insurance, or if they're looking to purchase new insurance on a property in the San Lorenzo Valley, that was, a lot of it's in the high fire area, could they reach out to you for insurance?
Yes, at this time, State Farm is still actively writing new homeowners business in the San Lorenzo Valley area. We've got very few restrictions at this point. So so we're still able to help most people out up there, even ones that are just purchasing homes now and are starting new coverage today.
Okay, excellent. So all of this was so helpful. Thank you so much for joining us. If people have questions, or if they need to reach out to you, maybe especially since, we talked about people not visiting their insurance and their dwelling coverage in 20 to 30 years, what's the best way for people to reach out to you?
Yeah, the best way to reach out to me would just be to contact our office. We are located in SoCal, and our office number is 831-477-9870. And we'd be happy to give people guidance, even if they're just looking for a second opinion. We're happy to help assist them with evaluating their current level of coverage and hopefully making them comfortable that they've got the appropriate amount in the event of a significant or total loss.
Wonderful. Well, I can't thank you enough for joining us. We'll probably be bugging you again real soon with more questions. And I thank you so much, and we'll see you on the next one, okay?
Great. Thanks so much, Kaelin. Have a great day.
Thanks.